Welcome in, everyone, to the Investing in Real Estate show. I'm Clayton Morris, longtime real estate investor, host of this podcast that aims to help you become a more intelligent real estate investor. And I think one of the ways that we can learn a lot is from other people's questions. This is our Q&A episode day, where you're able to leave us a voicemail question and we're able to play it here on the show and answer it for the audience. That's right. That's exactly what we do on this show. If you're new to the program, come on over to our website, morrisinvest.com. That's MORRIS invest.com. A little bit about our company. We run a full service rental real estate company. So our team at Sedera Wealth, we've partnered with them a number of years ago to build new construction properties. And the way that this works is you book a call with our team and we take care of the rest. So, again, if you're interested in being hands-off, a hands-off investor that wants to be able to own cash flowing properties, in the best markets in the country, where you have a team that handles everything for you, the great customer service team, and we partner you up with a great property management team. So many people are like, well, how can I invest in real estate if I don't know where to find the real estate and it's not in my backyard? Well, guess what? The best real estate investments are not in your backyard. They probably are not going to be where you live. They are in specific parts of the country that have fantastic returns, have the best jurisdictions, are the most landlord friendly. So if you live in Manhattan, no, I'm sorry. The best real estate is not in your backyard. If you live in California, the best real estate is not in your backyard. So anyway, book a call with our team today if you're interested to learn more, and we can help you through that whole process. We will hold your hand. Our team is fantastic. Again, go to morrisinvest.com. That's the place to go. Okay, we've got 3 great questions from 3 of our listeners, and we're going to dive into it today. Remember, you can always leave us a voicemail question by going to that same website at morrisinvest.com. There's a microphone icon on the right side of your screen. Click that, and you can ask your question. All right, I think our first one comes to us from Alexandra.
Hi, Clayton. My name is Alexandra. I'm here in Florida, and I've been laid off recently, and I want to know if it's possible to get started with the investing for real estate with about $5,000. It is a small amount, but I just want your opinion if it is possible. If so, what should my first step be?
Well, thank you so much. Look, money is one piece of the puzzle. I know it's difficult. People get held back by money, right? But there are 3 things that you need in order to be a real estate investor. You need a deal, right? You need a property. You need money, okay? And you need people. You need connections. And so when I started in real estate investing, I had no money. I had a massive amount of debt, and I had a terrible credit score because of what I went through during the 2008 collapse. So I was not in any kind of position to get loans or anything like that. And so what did I have to do? I had to go find deals. And I went and found deals. And what I started doing was wholesaling real estate. And I started finding off-market properties. And then I started flipping them to investors who wanted to actually do the rehab and renovate these properties. I didn't want to do it in New Jersey. In fact, I think you'd be crazy to do it in New Jersey. Renovating houses and flipping houses. It's like, you're in that house for 9, 10, 12 months renovating it. The taxes are insane. And you've got to know what you're doing with contractors and pulling city permits and all of that stuff, right? It's not easy. Absolutely not easy. There's big upside if you can figure it out. But so what I did was I would flip the contracts. I would, find a deal and I would basically sell the deal. And I was like, a middleman. I was able to make money in between the deal. And that's how I started saving up some cash. I would make $5,000 on a deal, $10,000 on the next deal, $20,000 on a deal. And I started putting that money away and I started using that to invest in real estate. I started using that cash to buy cash flowing properties, and turning it into long-term wealth. So one way to do it is to go out and find deals and partner up with local real estate flippers in your area who need someone who's hungry, who want a deal finder, and be a deal finder. That's one way to do it. The other way to do it is to find people, right? And draw connections with people to say, hey, look, I know that I don't have the money, but I'm willing to partner with other people. Another thing you can do, and one of the things that we offer at Morris Invest is a partnership program. So we have a lot of people that work with us to buy rental properties that do not have a lot of money, but they've partnered up with friends that do, and they form an LLC, and they're able to come together and invest together. And that's one thing you could look at as well. Like you might have a smaller fractional ownership of that property with your friends. That's one thing to consider in your partners. But don't let money hold you back from this. Another thing that you can do, we recently opened up our Connect Invest partnership for people that have $5,000 or $1,000 or $2,000, and they want that money to grow, but they want it to grow inside of real estate. So we partnered with our friends at Connect Invest, and they built something custom for the listeners of this show and for our clients. And what it allows you to do is invest in actual properties, as I think what the minimum is $500. And so you're getting those returns. You're actually investing in larger scale real estate projects, but you're doing it on a smaller amount. And then you can invest for as long as you want. You can do it like for a year. They have different timetables. So you could put that $5,000 into real estate for 1 year and get the nice returns. I think about 9%. Really great returns for that short term. And then you're able to take that additional interest that you just made from that 1 year that you had the money in there. So that's something to consider. We have it on our website. If you go to morrisinvest.com/connect, you could look at that as well. So while that $5,000, hopefully it's not sitting in a bank somewhere, that's something to consider as well. But look, again, you've been laid off and the money is kind of tight. So you've got $5,000 down. I think, if you've got that time now on your hands and you've got the tenacity, really consider, how can I be a deal finder? And how can I start bringing in a whole bunch of additional capital? Because I'm the deal finder. I found the deal. When you have a deal, money always flows. Money always flows. If you've got a good real estate deal, I've always found this to be the case. When I would find a great deal, maybe it's a deeply discounted or sort of off-market deal, and I would bring that to other investors who had money, the money would flow. The money would be right there because they would want to snap up that property and renovate it themselves, and they'll pay you a finder's fee. So I would consider wholesaling. I would consider looking at opportunities that might bring in some capital, or also being able to put some of that money to work for you right now, investing in real estate where you don't have to own the whole property, but you're able to do it fractionally by doing with our friends at Connect Invest. So again, go to morrisinvest.com/connect and see if that's an option for you. But I've given you like 3 different things here. So hopefully one of those 3 can help your mind to start moving in that direction. All right, our next question.
Hi, Clayton. Thanks so much. My name is Glenn from Phoenix. I'm a new real estate investor. Last April, 1 year ago, I contracted a builder to build 3 spec homes for me in Arizona City. The project length, according to the contract, was 4 months. We're a year in and only one of the homes is finished. 2 of the other homes are in different stages of completion, and I am paying a 12% interest-only construction loan on these homes, and my profits are all but gone. The market, but the fact that these homes have taken over a year to build is killing me, and I don't know what to do. Any advice would be greatly appreciated. Thanks so much.
Thank you so much. I hate hearing that, especially with a 12% interest, short money loan right now in this situation. Glenn, my heart goes out to you. Truly, truly it does. I've been there with contractors. Trust me, I've been there over the years. And fortunately, now we have an amazing team. But, years ago when you're trying to stick these things together, these people don't know you from Adam, and they don't know if you're ever going to be around again, So that's one of the benefits of working with a team that's like been around with contractors for many, many years, because they've developed those relationships. And a lot of times in contractors, especially in a hot market, and if you're like a newbie investor, they have no relationship with you, right? They have no long-term relationship with you. And so they'll do these properties. They may even overcharge you for doing these properties. And then they might, they'll probably never see you again, at the end of the day after you're done with them, because they don't think you're coming back. Sadly, that I've seen that time and time again. I'm speaking from experience. That's absolutely what happens with some of these guys. They take advantage of you. That's what happens here. So my question would be, first of all, I'm not a lawyer, So my first thing would be, well, what does a contract say? What does your contract say with these builders? If these things are not built in a certain amount of time, are you able to pay them less money for completion? I had a recent friend who just did a build project with a contractor, and that was written in their contract that if they didn't complete the project after 6 months, as stated, you told us you were going to do this, right? You said at the beginning, 4 to 6 months. If we don't hit it by 6 months, your profits go down 30%. If you don't hit it by 12 months, it's down 50%. I don't know how you maybe have it structured. What is the recourse that you have right now? You've signed a contract with them. Well, what's the fallout here? Can you go back to them? I would talk with a lawyer, quite honestly. I would get a lawyer on the phone and find out what you can do in this situation, because they've already proven themselves, right? They've already proven that they're not going to complete these projects on time, and you're losing money. So at some point, you have to consider contacting a lawyer and maybe cutting bait with these guys. Because do you want to go in the negative? Do you see where it's going now? You've literally lost all your profits. So that means if you hang out with these guys for much longer, what are you now going to go into the red? Right? You're going to go even deeper into the hole. So, it's like having a retail shop, and you know that the profits are not coming. So why are you holding on to the retail shop for another year, hoping that things are going to turn around, and they're probably not going to? So you're just going to keep going further into the hole. So again, I'm not a lawyer. I can't give you financial or legal advice on this particular situation, Glenn, but I can tell you what I would do is I would pull out that contract. I'd go over it with a fine-tooth comb, and I'd get on the phone with a lawyer and find out what your recourse is right now for this. I would also consider there are protections against these sorts of things for contractors in certain states. You said Arizona, I believe, right? So I might even consider contacting I don't know if it would be handled at the state level. Yes, I've done this in other areas, but I would definitely consider reaching out to perhaps like the Attorney General's office, because certain states are very, very stringent against contractor fraud. So reach out. You have definitely in states like Florida, they're very active against contractor fraud because they have a lot of it. What happens in Florida, certainly after hurricanes, these contractors kind of pop up out of the woodwork. They take people's money. They take advantage of people after they have to go fix stuff because of hurricane damage and stuff. So they're very, very stringent on contractor fraud at the state level. So I would consider reaching out to, first of all, a lawyer, then seeing what kind of things are on the books against contractors in the state of Arizona, and then I'd reach out maybe to the state if your lawyer advises that. I hope that helps. I know it's difficult, Glenn. My heart goes out to you. All right, our next question.
What is the minimum initial investment?
Okay, Mike, straight and to the point. I guess you're probably talking about our company, because I couldn't answer that for any other company. So at Morris Invest, to work with and buy one of our new construction properties that our team from Sedera Wealth builds from the ground up, the price range is, because we have a wide price range based on single family duplexes. Is it more of in the college area? So we don't have granite countertops. We don't have those. We have Formica countertops. In those other properties, we'll have some granite. So there's a wide range of prices, to be clear, depending on the neighborhood and depending on how close it is to the university and things like that. So roughly, the minimum down payment for one of our new construction properties is going to be about $50,000, roughly. So what I would do is just book a call with our team, because a lot of times that $50,000 can even be used from an IRA, a self-directed IRA, a 401k rollover. And then also, depending on your tax bracket, where you are, you might even get that entire thing back, your entire down payment back, because of a depreciation using a cost segregation that we throw in for free on a lot of our properties. So something to consider, but roughly $50,000. Mike, thank you for that straight and to the point question. I hope that's what you were asking, because that's what I can answer. If you have any questions, please come over to morrisinvest.com, click on the microphone icon and leave us a voicemail question, and we will attempt to answer it here on the show. 3 really great questions today. And Glenn, I'm feeling for you, man. Call us back and let us know what direction you go and maybe where you got to with some of these contractors you're dealing with. Hate hearing that. All right, everyone, go out there, take action, become a real estate investor. I believe it's the number one way to build wealth, even if you have some hiccups like Glenn's experiencing like right now, or Alexandra is experiencing right now with not having the funds and the capital that she would love to be able to do bigger things. She'll get there. I have faith that she will. So guys, take action and we'll see you next time.